Unless you've been off the grid for the past month, you've seen what's going on with interest rates. They are up and expected to increase. I just checked Bloomberg.com, and today, June 29th, rates are at 5.9%. That's a big jump from just a few months ago when they were around 3%. For a mortgage of $275,000, at 3%, that's a payment of $1,100 a month. At 5.9%, that payment jumps to $1,600. So that's a big difference, $500 per month. A buyer that can only afford an $1,100 payment for a $275,000 home will need to transition to a less expensive home in order to have that same payment. To a home that costs around $210,000. So basically, a rise in interest rates causes a shift down in what buyers can afford to pay, and those at the very low end are probably knocked out of that market. So looks like the market will slow down, and from what I hear and read from respected websites, the slowdown will not necessarily cause a big drop in prices, just a slowdown of price increases. Prices of homes increased so dramatically over the last couple of years that most sellers will do very well, even if a market slowdown causes them to reduce the listing price of their home. You know, we've all gotten spoiled, both sellers and buyers. Buyers with historically low interest rates, sellers by seeing a big monthly increase in the value of their home, and this is just not sustainable. So my take on all this, a slowdown in price hikes is not necessarily a bad thing. At this point, and for the foreseeable future, with millennials entering the market, there should be a flow of buyers. So demand may go down a bit with higher rates, but overall, I think the market should be okay. Unless, of course, there's a disaster of some sort. So with that said, let's look at June's numbers. And I got these charts from Bright MLS, which is the multiple listing system agents use for this area. In addition to posting homes for sale, they provide various statistics on the market. So let's take a look. The first comparison is days on market, the median time it takes to sell a home. And that looks to be trending up slightly from 6 days in April to 8 in June. 8 days is still amazingly short period of time. That's the median, which indicates the number in the middle of a group of numbers. The average days on market yields a different number. And you know, averages can be skewed by one or two numbers that are way out of the norm. In June, the average days on market shows 24 days, and that's still not too bad. But if my home was on the market for that long, I'd be reassessing the price. A home in this market should not take that long if the price matches the market value and condition of the home. As the market slows down, the expectation for how long it takes a home to sell will likely need to be adjusted up. Right now, correctly priced homes are selling pretty quickly. Number two, number of expired listings. There's a jump in that number. 427 expired in April, 497 in June. So more homes are not selling during the listing period. The reason for that is usually because the listing price doesn't match the value or condition of the home. You know, I think all the hype about the red hot market has caused some sellers to be too optimistic about what they can get for their home. Even in a hot market, if a home is priced too far over market value, it probably won't sell. There's a real estate proverb. When choosing asking price, you are really choosing how long it will take to sell. How much you get is determined by the market. If we keep seeing a rise in expired listings, then it's clear that too many homes are probably listing over market value. Number 3, median sales price. That dropped in June a little bit from 305 to 282. However, the June sales price data mostly reflects May contracts, since it takes around 30 days to close and the sold price is not reported till settlement. So the sales price for homes that went under contract in May wouldn't be reported till June. So July sales price results will tell us more about the June market as far as what homes are selling for. If that drops, then we'll know that prices dropped 2 months in a row, which may be an indicator that price hikes are slowing down, as everyone is predicting. Number 4, months of inventory. That number reflects how long it would take for all the homes currently on the market to sell if no new competing listings appear. A balanced market is around 5 months, 4 to 5 months. A seller's market is below 4. This area is still 3 months, so that indicates at least up to and including June, it's still a seller's market. Number 5, number of sales. That dropped in June, but there's not enough information yet to see any trend on that front. Same thing for active listings. The number of homes for sale, the supply of homes, dropped in June. In a declining market, we would expect the opposite. That number, which indicates supply, would increase, which we may very well see in coming months. But right now, the supply of homes did not increase in June. How about the number of buyers? Is that declining as well, as you would expect in a declining market? According to MortgageNewsDaily.com, mortgage applications to purchase a property have declined since January, about 13%. Something you'd expect when interest rates go up. So, wrapping all this up, as of the end of June, the supply of homes did not increase, and we are still in a seller's market, with the months of inventory still very low, around 3 months. There are more expired listings, so that could indicate listing prices may need to be adjusted down. And what is pretty clear is the decline of people applying for mortgages. So we'll see if that continues. That could be the initial shock of the sudden increase, and once higher rates feels like the norm, then mortgage applications would resume. But a lot of people disagree with me on that. They think that it's going to be pretty much decrease the pool of buyers for a long time. One thing it will do is cause many buyers to lower the amount they are able to spend on a home. So, looks like the market's still leaning toward sellers. The number of mortgage applications went down, and a slowdown of price increases is likely. So we'll see if that's still the case in July. I will be back with those numbers July 31st. All right, so thanks for tuning in. You have a great day. I'll see you next time.